Well, WSP Global is out now with its fourth quarter results, and it's recording a record backlog, improved organic growth, and strong free cash flow. My next guest says WSP shares have been hit harder than peers due to recent AI-related market pullback, but argues the sell-off is overdone. We're joined now by Jonathan Goldman, analyst, diversified industries at Scotia Capital. Jonathan, thanks very much for joining us.
Good morning. Thanks for having me.
All right. Will this report do anything to alleviate fears?
I mean, unfortunately, I think we're in a market right now where sentiment is dominating. You're seeing, dystopian fan fiction every day about what AI could do. I mean, you alluded to the backlog in your opening comments, and I think that's the key here, right? 17 billion, that represents 11 months of work. If we were going to see any cracks that AI is disrupting engineering, it would be there, and if anything, it's still growing. So it's tough to fight a narrative right there that's out there, but the results themselves, the backlog, all the leading indicators that we have suggest the business is resilient and the industry fundamentals are actually really strong.
And are they working with? Obviously, I'm guessing they're working with AI. How are they implementing it? How is it going?
It's a good question. We actually spoke to the company last night, and what's interesting is a lot of the conversations that they're having with customers is not about what AI could replace, but it's what AI could add. Mm-hmm. AI in engineering, aside from just increasing productivity, actually opens up a whole new area of services, scenario analysis, data analytics, different things that would have been maybe prohibitively expensive or maybe out of reach of lots of customers are now completely open to that whole vista of people. So actually the conversations they're having is how can we add more from AI? So your question is, how are they using it? We view WSP as having kind of the leading AI deployment franchise. They announced a unique partnership with Microsoft last year, where they're both each their exclusive partner for development of AI and deployment and also construction. And the way they're using it is not only Copilot licenses, but it's also deploying AI in unique ways of analyzing data throughout projects and getting kind of early in on the life cycle of projects rather than just the front end engineering. So still early days, but the possibility of what could be done in addition to the work they're already doing is the real upside here.
All right, and I guess real world, the TRC acquisition, how is that growing? How is that going? How's the handover doing?
Great. So we talked about the TRC acquisition, right? That was done late December. This is kind of something I think that's not getting enough airtime. This was a phenomenal deal on many levels. I mean, we can talk about the price paid, but what really this did is it gave WSP even more exposure to the power and energy segment. They did a big deal in 2024 called Power Engineers. So with TRC right now, 20% of the entire platform is exposed to power and engineering. And as you know, and I'm sure your viewers know as well, that sector is just growing phenomenally in the mid-teens, maybe even above, on all the incremental power demand that's coming, from AI and data centers. So it's funny, on the one hand, the market has a negative view on AI and disrupting all these engineering services firms, but they're also ignoring the fact that WSP is going to be a direct beneficiary from all the data centers that need to get built, all the advising and consulting to set those up and connect them to the grid. So there is a direct line actually to AI and infrastructure build out and WSP benefiting from that. So TRC was a phenomenal deal in that regard, and it really positions them as kind of the leading organic grower among its peers.
Okay, let's bring in Stantec. Get your thoughts on them.
Yeah, it was another solid quarter from them. WSP and Stantec. Again, the shame is the AI narrative, but really nice beat on the quarter from Stantec. Again, really surprising on the margins. A lot of work they're doing there. Their guidance also beat consensus estimates for 26. That was also on the margins. They're continuing to do just a really solid job controlling what they can control. And I think that's on the margin side, but also driving revenue growth, reaccelerating in the US. The outlook looks good for 26. And I think the Stantec story here is differentiated insofar as they have a little delta to bridge to meet their 26 targets that they originally came out with in 24. But they have a lot of dry powder. They haven't been as active as WSP recently on M&A. So we're actually looking for them to be a little more active earlier in the year. That could happen sooner than WSP because, as you mentioned, they're still integrating the TRC acquisition.
All right, and last one I want to bring in here is Atkins. their shares are up slightly right now.
Yeah, so this one's performed the best of the three year to date. The differentiator here, as you know, it's part engineering business, part nuclear business. So the nuclear business, again, is a direct beneficiary of the AI build out, the data centers, and kind of this nuclear power demand that's going to happen. So for them, I think everybody is looking to the nuclear business and what that business can grow, the backlog there. They do have a nice portfolio and a pipeline of life extension projects. I think the big one that people would be waiting for would be an announcement of a large-scale nuclear reactor. So those are the big ones, not the SMRs, which they do participate in small scale. But the large ones, I think that's the real hammer that people are waiting to drop. And that's also an offset to the engineering business, which I think has kind of insulated them from the broader sell-off to some degree.
And any concerns with the large reactors? I mean, it takes a while for them to get going, and B, governments change, mindsets change. Any worries about that?
It's always, up in the air. It's always a moving target. But what I would say is the nuclear technology that Atkins deploys is actually owned by the government of Canada. And they give the exclusive license for building and deployment and monitoring and maintenance and operations to Atkins. So you kind of have a de facto endorsement from the government of Canada already built in. And this isn't a technology that the government of Canada does want to export worldwide. So you're kind of stuck in having to endorse it, domestically on your home soil first. And I would also point out that the government of Canada is also financing the development of the next generation of reactors that Atkins is developing, the Monarch. So you have a pretty solid endorsement from the government of Canada. Things can change, but it does seem to have bipartisan support across governments in Canada.
All right, and I just want to go back to the AI for a second. There's been a lot of talk, I think, where people are looking at 2026 as the year that it gets implemented. In this sector, do you feel that, they're already bringing it in. Do you feel this will be the time when it goes full gangbusters and we'll be able to see if it's going to work and who it's going to affect the most, both positive and negative?
That's certainly the sentiment that markets are banding about. I think we're a long way away from that. These are really complex, high-touch projects that we're designing bridges. And I think the element that people also forget is there's a huge liability component to this as well. So whether you design the bridge or AI does it for you, the engineering firm of record who's licensed and accredited is still liable for the operation, maintenance, and whether or not that bridge actually functions. So even if there are upstarts that could design bridges, it's unlikely that people would be willing to give up the liability and just outsource that completely. And secondly, these are trusted relationships with customers that they trust WSP's expertise.
Okay, I got to wrap it up there, Jonathan. Thank you very much for joining us.
Thank you.
Jonathan Goldman, analyst, diversified industries at Scotia Capital.